Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my market update. I just got back from Vegas for the weekend, and I wasn't planning on doing this, but I had a number of emails asking where my update was, so this may be short. I titled today, Sell the Rumors, Buy the Bombs, and my email address is htsidoc@gmail.com, and I welcome comments, remarks, either within YouTube or via email. As always, it's for educational purposes only. I'm a doctor, not a broker. I don't have any licenses that would suggest that I could be giving you investment advice, so anything I talk about should be considered just education. I show you the tools that I use in my daily trading. I paid for the tools I use. Trading involves risk, and you alone are solely responsible for any investment decisions you make. The intent of this generation of these web videos is to simplify things. I'm not going to flip around between 10 different programs. That doesn't mean that I don't have other programs that I use. I'm trying to simplify what I do in my nightly review so I can spend more time with my wife and grandkid and others. And I'm trying to show how I can simplify that using wealth charts. So let's go ahead. Stock patterns are cyclical. I talked about this, I think, last week. And, it really felt like we were going down to despair. And then at perhaps a very natural place, we saw a reversal. Was it because the markets prefer the end of the rhetoric and the beginning of the bombs dropping because that's how you get closer to the end? Or was it just where we were from a technical perspective? Now the question will be, were Thursday and Friday a head fake and a bull trap, or are the futures tonight not indicative of where we're going and the market's going higher? I think there's still a lot of doubt here, although things like the VIX came down. What's not a doubt is the value that you'll get from the Wealth 365 event. As you can see, it's April 4th through 9th. To those people who've been asking me when will I start selling my add-on and when will I announce more formal things that I'll be doing, such as mailing lists and other educational opportunities, I hope to reveal everything there and launch my marketplace indicators. You could see here to register www.summit.wealth365.com, and then with hyphens between it, but Dr. Jeffrey Scott. I'll put this in the YouTube comment section so you can click on it to register. I'd appreciate you using that link. Great event, nothing to buy. If you don't have Wealth 365 or Wealth Charts, the software program, if you don't own it, as I've talked about in the past, the best time to buy it is at one of these events. So that's it on the PowerPoint. Let's take a look at some charts to start the night, and then I'm going to go to sleep. So let's go take a look at the indexes. Let me do function F11, make things a little bit bigger and fill the screen. So let's start by looking. Here's the spiders, the Qs, the diamonds, the IWM in the lower left, and then the VIX, VXX, and then the dollar. So not a shocker. We came down. Make sure let's get on the daily. I'm sorry. And bring this up here. We failed. We set the January 24th low. We failed at the trend line, came back down, failed at the 200-day, came back down, took out the January 24th low, and we had a massive intraday reversal on Thursday, closed up nicely, closed at the high on Friday. Now, the good news is we had a massive intraday reversal that even though we undercut the January 24th low, we did not close below it, so that's pretty awesome. And the hope is that we can go higher. That would be the bullish case. The bearish case is we still got a lot of resistance overhead, including that 200-day moving average. This trend line here is going to be intersecting about where that 200-day moving average is well. And then we'll have the 50. So do we have more days up? If I was a betting man, even with the futures, I would say yes. But it's not clear sailing with wide open blue skies. If I look at the Qs, similar thing. Intraday breakdown below the January 24th low, closed above. Strong day on Friday, and again overhead supply resistance there. And I don't need to go through everything. You can see the exact same thing on the diamonds, closing above the low. The Russell actually demonstrated some strength, although it too did get below the January 24th low. Look how the move it had. Still is below the bottom of the previous Darvas box that was there for quite some time and could be formidable resistance to get above that. The VIX spiked pretty much at the open on Thursday, and as the markets improved, the VIX sold off. This would be bullish if you're long. This is the type of thing you'd like to feel that this is supportive of your long position, at least right now. And one thing I've said multiple times is I do better stock-wise when the dollar's weak, and the dollar ran up high on Thursday. I guess when the bombs flew, it was a defensive play, but as the market started to recover, the dollar reversed and was weak on Friday as well. If I look at some commodities, gold spiked with the war, but as the market turned around, gold came down considerably. And what I said last week is if there's a solution here, expect gold and oil to come back quickly. So gold came down despite the fact there were bombs. If the war continues, you might see gold go further up. Same thing with oil, as there might be concerns about supply, as Russia does serve much of the world with oil and natural gas, which you can see here. All of these three complexes, as well as silver, rallied at the open on Thursday, and especially overnight Wednesday into Thursday, and then sold off as the markets recovered. You could see Treasury yields had a reversal candle back here on the 16th, even a sell signal, EMS sell signal. They're off their highs at 19.48%. One thing that we might expect to see if the war escalates and the nuclear discussions continue, you might see a retest of some of those lows. And with those lows, you might see bonds rally, which could, you can see they rallied early Thursday, could lead to falling on the interest rates. All right. Now, within the indexes, I still like to look at things like what's working. And so I always like to look very simple, IWB large versus IWM small. And what I see here is that this is selling off. This is a daily, suggesting that the small stocks are starting to have some life in them. Over here, I look at growth versus value, and growth would be if I'm in the upper right-hand corner, value the lower right, and you could see that even though we had a move up at the end of the week, we're still in a downtrend favoring value over growth. And if I want to look very high level at the sectors, I can look at the hourly, and these are all ratio charts comparing a S&P sector versus the spider themselves. And what you can see is that materials did have strength, not a surprise, rallying up with the bombs dropping, and communications the opposite. Energy has been strong, had another move up, you can see here. Energy leading. Financials on Friday stabilized. Now it would be interesting to see with blocking the Russian banks from the SWIFT system whether or not financials give back some of that game. Industrials in the middle. Technology in the lower part of their recent range. Staples, defensive play, moved up, as did real estate and utilities. So even though the markets rallied so much, it's interesting on these hourly sector charts that these three defensive talking sectors actually rallied. Healthcare, another defensive, strong, and you can see discretionary, a risk on sector is down while the risk off are the ones leading. All right, well, I've learned a little bit there. I've learned to be cautious because, as I said, I can't ignore the futures, but there's still, when you start talking about raising your nuclear alerts, that can't be a good thing. If I go to the Gmma charts, now When I looked at this the first time today, I scratched my head. Why are they not showing a breakdown below the January 24th reversal low? And it's simple. These are not open high low close charts, not candles. This is just a simple line chart. So it's capturing the end of day values. And you could see on an end of day value how we closed above the line, even though we broke intraday. You can see here on the Qs. Where are we? We're still in downtrends. I don't see any buy signals anywhere on the right. The wealth signal is the circle, the EMS is the triangle. It would be nice to see that occur, and those probably occur before we retake the moving averages. So this tells me, you know, we're not out of the woods, although clearly we healed some. Let's go over to charts and scans. If I go into Wealth Scanner and look at my top-down indexes, what comes to the top? Gold, commodities, gas, oil, the dollar, metals and mining, exploration, natural gas, energy. So clearly on the time frames that I use here, and I don't use the weekly and monthly, so I'm using mostly shorter time frames, that these commodity stocks, which are probably up because of what's going on with Russia and Ukraine. Ukraine, they used to say, feeds the world. I think they're like number 5 exporting food, and then the oil and gas really will put some pressure potentially on commodity prices. Where's the weakness? If we look here using the wealth scanner, microsectors, FANG, communications, bonds, some of the ARC stocks. Now, some of these did rebound end of the week, so things like ARKK, which has been very weak, and the 50 actually showed some improvement end of week as the markets recovered. If I go into sector scanner, and I'm not going to spend all night doing this tonight, so I'm just trying to be very brief, you could see that on Friday across the board we saw positive changes. If we look at the weekly changes, you could see the only thing down on the week was communications. And just for grins, if I open up everything in the system, all the sectors, all the industry groups, all the stocks, and let's just put a price kicker in here. If I can do that, I don't think I can do that, can I, Jeffrey? All right. You can see, you know, some of these with all these extra letters are shell companies and SPACs and things and small things, but you could see that there were a number of things that had big moves. Let's just look at daily algo scores. Get a sense of where some of the strength was. But that's too much work right now. I want to do a short review. So let me show you how I use my CAT scanner as a tool to help me. Before I go there, I just want to, what I have done, I'm just not going to do tonight, is I have done my top-down review, and I created, as part of that, my weekend review long stocks. So we may look at some of those in a minute. And again, I do my top-down review by taking the top performing sectors. Again, I'm just trying to shorten this because I want to go to sleep, and I'm doing this because some people ask me to. If I look at the top sectors, I can then pick the industry groups in those top sectors. I'm going to pick them all. Just highlight down to here, and then compare. That'll pull up those stocks, and then I can rank the stocks by daily change, algo scores, so on and so forth. I've already done that. I've built my watch list. Let me show you what I do with them. I go to the CAT scanner, and let's pull up my weekend review. So I have a number of stocks here, and I just want to make sure, go over here, and I'm going to pause for a second and just check something. All right, I just wanted to make sure that everything that I wanted loaded was loaded. And let me show you some really cool things that are going on with my filter. I had a number of people ask, or this is for my CAT scanner, for me to be able to include multiple days of the EMS signal. That will be coming. It's not finished yet. We have upgraded the high-low jump so the numbers are more reflective of what I've used at other platforms. And I've made it so you can break out bullish versus bearish dots. Why does that matter? So if I open up my little filter here, let's say I only want stocks where the price is greater than or equal to $5. Okay. I've got to remember which computer to type this on. I want bullish dots greater than or equal to 1. The more dots, the better. I don't want anything that has anything more than I'll take one bearish dot. I don't want anything more than that. And let's just look at what we have here. And apply the filter, and you can see my list is still pretty long, but everything here has got green dots. Now if I was to rank these green dots, look at AERI. This is a pharmaceutical company that's had a pretty deep sell-off, and this is a way that I start going and finding stocks that are attractive to me. I don't want something in such a strong downtrend unless there's news. But for those that haven't been watching me do this, I've got a big gap, I have big volume, I have a breakout in momentum. So that's enough for me to pay attention to. I'd have to do some homework. AGO, Assured Guarantee. Well, insurance companies are defensive, financials do well, and this thing broke out above the 50 this week and is clearly poised to go higher. And look at the 4 dots. Now, is it getting extended? I look at the high jump, it's at 100%. That makes me a little nervous because it tells me it's as extended as it's gotten. I can go through this list. Budweiser, this is a pretty defensive play. It's not extended. And a breakout above the 200 from a squeeze. I like that, a new EMS indicator. What I didn't like about Budweiser, it's still got to get above that 200. It's at 72.58, but that's a 10% move. That might be something that is interesting. So I can use my scanner in various ways. Looking here, I'm just looking at stocks that have so many bullish dots. Now, if I want to make it even tougher, I could say, I want you in a squeeze as well. Why? Because as you saw here with Budweiser, being in a squeeze, the price was pretty close to where it's been basing. It wasn't too far gone for me to chase. When I looked at the AGO, for example, there was no squeeze, as you can see here, and the stock had jumped. So let's add the squeeze. It's going to make the numbers smaller. And now, if I want to find some really cool candidates, I can start going through this list. And I recognize these because I looked at many of these over the weekend. Acadia Healthcare. I'd probably, again, to the same argument I gave before, I'd rather buy something above prior resistance. Just think, all these people here, if it only goes higher, I could sell. I might accept resistance here. But it has a new EMS indicator. It had 3 dots coming out of squeeze. BCE is one that I know I like. This is I believe, a Canadian telecommunications company. It broke out here. Now, it's got a weekly RMS sell. Excuse me, EMS sell. You haven't seen the REMS yet. Maybe bothersome. Probably not. I look at this tail. It's above the 17. I like this coming out of a squeeze with 3 dots. Bungie, I own CF already. We've talked about that. Here's another in the same complex, breaking out, and you should see 3 dots coming out of a squeeze because that's what I scan for. And how easy is this to start bringing up stocks? Now, let's do another filter. Let's now say I don't want things that have been in a downtrend at all. So let's now scan for only if you have to have a bongo weekly bullish. So watch, the list is going to get smaller and smaller. Still a lot of stocks, but every one of them is in a weekly bullish bongo. And then even look here, Chevron. Wow, big stock. Now, the interesting thing is, despite the big run, it sort of based up here. And when it went into a base, it allowed it to come into a volatility squeeze. So perhaps if you've missed out and you want to chase some Chevron, it's giving you another opportunity. And the squeeze helps me find the stocks that are not extended. And then let's add that EMS signal. And now I'm looking at stocks that just have a lot of things to like. Let's hit apply, and I'm down to 1, 2, 3, 4, 5, 6, 7, 10 stocks from the entire universe that I looked at. And we've already looked at Bud, and as I said, I like this. It's breaking out above the 200. I'd be worried about resistance here at that 200, which is over 72. Boston Scientific, you could see it breaking out of a squeeze here as well. The weekly looks good as well. 3 dots. Chevron we looked at. E, I think that's a foreign energy stock. ENI. Don't know what it is. Do I really care? It's got an EMS signal. It's got a gap up, momentum, and a breakout in a squeeze, a PSAR reversal, fresh EMS signal. SRE Sempra. I think this is a utility breaking out. We saw that utilities had strengthened. DCP, which is a midstream, so it's an energy play, transmission of energy. Typically these things pay a dividend. You can see it's breaking out here, has an early movement signal, a momentum and a breakout from a squeeze. Devon Corporation, again, in an uptrend, that's what you get from the weekly bongo. Enough sideways movement here that the Bollinger Band comes within the Keltner channel and you get a signal of a squeeze. And then you get my breakout signals, 2 of them firing, the momentum and the breakout. Hormel, consumer staples. Aren't these the guys that make Spam? So many things I could say about that, but I'm not. Breaking above the 50. 2 dots, a squeeze, a PSAR reversal. Bongo daily changed as well. On the weekly, it's above its moving averages. You had the 50, 17 crossing the 50, which is good. Henry Jack and Associates, I don't know what they do, but I can tell you they've been going sideways for a while. And now what happened on Friday, they had 2 dots out of a squeeze and a new EMS signal. NI, which is another utility, pulled back to the 50 and a flag and broke out. Now this is interesting. This is a stock that you might expect to do well if the economy slows down, a utility, a dividend payer. Here it is breaking out on Friday. And lastly was VTR Ventas, which is a REIT, I believe a healthcare REIT. It's below the 200, and again, I prefer to buy things that are above the 200. But frankly, any move up on Monday, this thing gets back above the 200. Looks interesting as well. So these are not recommendations to buy. I just wanted to show you how quickly I can look at the market from an indexes, from a sector perspective, get a sense with the Gmma charts of where we're at. With my market theme charts to understand what's working, and then lastly using my CAT scanner to actually narrow in and take a list of thousands of stocks and bring them down to just a few. I know people like to see the stocks I'm looking at. Not finished with my short list. Frankly, it was hard to find shorts. Doesn't mean they're not going to be there. That's not the one I wanted to show you. The buy watch list. A lot of stocks on this list. Expand it here. And I'm just going to go down it very quick. I know a lot of people like to look at it. What does the buy watch list means? It means I've gone through my scans. I've looked at the charts. They're interesting. I'm not going to buy every one of them. There's no guarantee I'm going to buy any of them. But what it is these are stocks that I thought had interesting chart patterns. They showed up on my CAT scanner. Many of the ones we looked at is here. And I've got to have something that I can make small enough that I can actually manage. And this is how I do it. So on that note, I'm going to say good night. Have a great week. And again, I do want to just remind you that that Wealth 365 event is coming up. I hope you can attend and you can see why I'm so excited by the program as well, and that I will be placing that program, the URL for the Wealth 365, in the YouTube notes. Goodbye, everybody. Have a great week.